Welcome to this tutorial on how to buy puts on Robinhood, a popular trading platform that allows you to invest in stocks, options, and other securities. In this guide, we will walk you through the process of buying puts on Robinhood, explaining key concepts, providing practical examples, and sharing best practices. First, let's start with the basics. A put option is a type of financial derivative that gives the buyer the right, but not the obligation, to sell a specific stock or asset at a predetermined price, known as the strike price. Buying puts can be a useful strategy for investors who want to hedge against potential losses or speculate on a decline in the market. To buy puts on Robinhood, you will need to have an account with the platform. If you haven't already, sign up for an account and fund it with money. Once you have an account, navigate to the search bar and type in the ticker symbol of the stock you want to buy puts on. Select the stock from the search results and click on the Options tab. In the Options tab, you will see a list of available put options with different strike prices and expiration dates. The strike price is the price at which you can sell the stock if you exercise the put option. The expiration date is the last day on which you can exercise the put option. Choose a put option that aligns with your investment goals and risk tolerance. When selecting a put option, consider the premium, which is the price you pay for the option. The premium is affected by factors such as the strike price, expiration date, and volatility of the underlying stock. A higher premium means you pay more for the option, but it also means you have a higher potential payout if the stock price falls. Once you have selected a put option, click on the Buy button to open a trade ticket. In the trade ticket, you will see the details of the put option, including the strike price, expiration date, and premium. Review the information carefully and confirm that it is correct. Next, enter the number of contracts you want to buy. One contract typically represents 100 shares of the underlying stock. Make sure you have enough money in your account to cover the premium and any potential losses. After entering the number of contracts, click on the Review button to review your trade. This is your last chance to cancel or modify the trade. If everything looks correct, click on the Confirm button to execute the trade. Congratulations! You have now bought puts on Robinhood. Keep in mind that buying puts involves risk, and you can lose some or all of your investment. It's essential to have a solid understanding of options trading and to use risk management strategies to minimize potential losses. In conclusion, buying puts on Robinhood can be a useful strategy for investors who want to hedge against potential losses or speculate on a decline in the market. By following the steps outlined in this guide, you can buy puts on Robinhood with confidence. Remember to always do your research, set clear goals, and use risk management strategies to protect your investments.